have more of a team. So part of my team is, you want to introduce yourself?
Okay.
Victor. I have the set also that works with me. Sorry, go ahead and introduce yourself.
Oh, my name is Lisa. I work with her. I actually been working for him for like 5 years already.
Okay.
But yeah, one of his buyer's agents.
Yeah, so she handles a little bit more like the admin. Then we have one of my preferred lenders, which is
Lewis,
Lewis,
with Guarantee Financial, yes.
Okay.
he handles all the financing. Okay. Then we have the, let me go with the attorney next.
Hello, Chris Soprano, I'm
Okay.
attorney.
Okay.
So he's out in Oak Park. That's where his office is at.
Okay.
Then another good friend of mine here,
Christian Navarro.
First of all, wait, not good.
He's with State Farm with the insurance.
Well, that's what I got, so I'm all right.
Oh, there you go. And then we have here.
My name's Hamza, and I'm a home inspector.
Okay.
So you got everybody in the house.
Complete team.
Yeah. I mean, I wish we had a little better turnout, but all right, let's get started. Lewis is gonna start talking about the actual approval.
Okay.
If you open your folder, the same exact slides are there, so when you take it home, you can go over it.
Okay.
But if you have any notes, if you have any questions, feel free to
Okay.
just chime in. So go ahead, Lewis.
So basically, when you're buying a house, I mean, you have different options with regards to mortgages, right? Each mortgage option depends on credit score, you know, what type of property you're buying, how much money you're looking to put down. So every situation is different for everybody. So we kind of tailor that to specific clients. You know, the type of loans, some programs have a bigger down payment than others. Interest rates vary. If it's a government-sponsored loan, like an FHA or VA, those are government-sponsored loans that tend to have lower rates. Other interest rates are a little bit higher depending on how low or how high your credit score is. Loan amounts, right? So if you're buying a single-family house versus a 2-unit, there's a certain amount that you cannot exceed for a specific type of loan. So what we're going to do is we're going to talk about, go to the next one. Okay, some of the documents that you need for buying a house: state ID, right? W-2 forms for the last 2 years. We want to make sure that we know your employment history for the last 2 years.
Okay.
So when you're buying a house, we don't care how many jobs you've had, but as long as you're consistently working for the last 2 years, right? So part of that is verifying your income through W-2s. So the W-2s, like I say, it's just to verify that you've been employed, but we're going to focus on your income based on what's on your pay stubs. Check stubs, most recent check stubs. So we want to see pay stubs for the last two payment cycles, right? So if you get paid every 2 weeks, bi-weekly, semi-monthly, we want to see those pay stubs. If you get paid every week, then we want to see a month's worth of pay stubs. Okay, recent bank statements. The reason this is very important, one, because we want to make sure what type of funds you have in your bank account for the purpose of a down payment. So we only look at bank statements for the last 2 months, right? If you have a big deposit that you made from one day to another, and it's on your bank statement, we're going to ask where it came from, because they want to make sure that it's coming from a credible source. If you deposited a large sum of money 4 months ago, we can't see it, we're not going to ask for it.
Okay.
So, but we only want to see what's in your bank account for the last 2 months.
So just to simplify, they're gonna verify income. They're gonna well, I guess the income is gonna be
Income, assets, and credit. So here are some of the type of loans that we have. FHA is a government-sponsored loan that allows you to buy with a little bit more flexibility. You don't have to have excellent credit. You don't need to make a certain amount of money to qualify. They're very flexible with providing lower interest rate loans, less than perfect credit per se, right? So with FHA, the minimum credit score is 620. Debt to income ratio, what that means is how much money is coming in as a household versus how much money is going out. So with an FHA, they're a little bit more flexible. You can essentially buy more house with the income that you make on an FHA loan, where your debt to income ratio can go up to 55. Other type of loans are a little bit more conservative, so FHA is a little bit more flexible. Again, because it's a government-sponsored loan, interest rates are a lot lower. You know, as long as the government sponsors it, rates are a lot lower. Private mortgage insurance. What private mortgage insurance is, a long time ago, before any of us was even born, the only way to buy property in this country is by putting 20% down, right? So if you didn't have 20% down, you were not able to buy. So what the government did, a lot of banks did, is say, look, we're gonna make it easier for people to buy. You have to put down 3, 3.5, 5, 10%, 15%. You don't have to put 20%. And we allow you to put down the lower amount to make it easier for homeownership, but you have to pay what's called private mortgage insurance. So the private mortgage insurance, it's an insurance that protects 20% of the loan in case you default, right? So you're still able to buy a house with a smaller down payment. The bank doesn't take all the risk, and it's a win-win for everybody. Now, with the PMI, it's a percentage of your loan amount divided by 12 months. The good thing about FHA is that it's the same for somebody with a 620 credit score as opposed to somebody with a 780 credit score. The PMI factor is the same for everybody. With other types of loans, the higher your credit score, the lower the PMI. The lower the credit score, the higher the PMI. So conventional loan is a more traditional loan. This is a type of loan that requires a little bit of a higher credit score, a little bit more conservative with the type of income you make versus how much debt you have. Mortgage insurance is going to vary again depending on your credit score, but there's pros and cons for each, right? So the PMI that we talked about with FHA never comes off. Eventually you have to refinance out of FHA to go into a conventional loan and eliminate the PMI. On a conventional loan, the PMI comes off by itself over time, so you don't have to worry about it.
What I was gonna tell you, Louis, maybe just to make it more direct to him, Scott, would this be are you buying a house for the first time?
Yeah, first time.
Okay.
Yeah, so that basically for a first-time home buyer, we're gonna focus on these two areas here, right? Either option A, option B. Non-owner occupied is as an investor. You already have a property under your belt. You're buying another building to rent out. That requires a bigger down payment, higher interest rate because you're not going to live in the property as a primary residence.
Yeah, I think for first-time home buyers, these are typically the two types of the primary loans that allow you to buy a house with the lowest down payment.
Right.
And I think you had discussed like your income. You've been working for the same company for how many years?
About 14, 15.
More than enough time.
What is it that you do again, Scott?
Drive trucks.
Okay.
Yeah.
Are you W-2 or
W2.
W-2? Okay, perfect. So with both these options, we're going to look at three things. In a nutshell: credit, income.
See, the whole thing is, I don't know, I got a credit. That's why I want you to run the credit.
Yeah,
see what
yeah,
I got.
exactly.
You know what I'm saying?
Yeah,
Because I got,
and that's
I'm trying to find things cash.
we work with that to say, hey, look, based on your credit score, this is the avenue we could take to improve the credit score over time.
Okay.
Or these are the options available to you right now based on the current credit score that you have. So, there's definitely room to
wiggle
make
around.
it. Yeah,
Okay,
absolutely.
Yeah, once he pulls credit, we'll be able to figure out which loan option fits you best.
Okay.
So then we're gonna discuss how a payment is broken down.
So basically what we're looking at is any type of property you buy, right? Whether it's a 2-unit, single family, condo, whatever you decide to buy, we're gonna look at the purchase price, what the property costs, right?
Okay.
For an FHA loan, your down payment's generally gonna be about 3.5%.
Okay.
So 3.5% out of 300,000, using this as an example, we're looking at 10,500.
Okay.
Interest rates on an FHA loan, even though they're lower, again, we could get you a very competitive rate with a little bit of a higher credit score, but we can still make it work with a 620, 600 credit score.
Okay.
So here we're using an example of 3.95. As a first-time home buyer, you're probably going to look at a 30-year mortgage because that's going to give you the lowest payment starting off, as a first-time home buyer. And then we're estimating property taxes, $5,900, homeowners insurance, $1,000 a year. It could be a little bit more, a little bit less, depending on the company. So here we're calculating PMI, the private mortgage insurance that we talked about, right? So once we factor it in, we're looking at an overall payment of $2,161, which is principal and interest, taxes, insurance, PMI, and and that's what we're going to determine how much you qualify versus how much income you're bringing in.
Hold on.
So there'll be the taxes included for the property too?
Yeah. So we're going
Vienen al
to
seminario, ¿verdad?
taxes.
Prefieren Pasen a sentarse.
That, the bank likes to pay everything at once.
That's what I like.
¿Vienen juntos?
Exactly.
Ok,
So,
si quieres,
when
no
you're
me
looking to buy a house,
ya habíamos
obviously
empezado.
you wanna know
Ay, disculpa, es
No,
mucho
sí.
tráfico.
property
Hi,
costs.
primo, ¿cómo estás?
Oh, Cristina, ¿cómo estás?
No te reconocí. Ah,
So those are the two numbers that we're gonna look at.
¿Van a-
And then
prefieren que les
based on that,
traduzcamos en
you say, hey,
español?
look, you qualify for this
Ellos
much,
te
this
entienden.
is your max
¿Sí?
payment.
Ok, ¿qué tal? ¿Cómo están? Soy Erik.
Based on your
Hola,
credit,
mucho gusto. Soy Erik.
This is how much you can afford.
I'm so happy to name to go along.
No,
So,
no, 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 no,
as many
no, no,
as you want, as long as your credit is very similar to yours. Because if you have multiple people
Mira,
on the
prima,
loan,
¿sabes lo que
banks are
podemos
gonna use
hacer?
the lower credit score of the.
Vamos a repasarles al señor, como ya empezamos en inglés,
Okay.
lo hacemos rápido y luego ya te repasamos en
español.
español. ¿Sí? Y ya para que cualquier preguntas o dudas que tengan ya las dirigimos a ustedes.
Thank
Yeah, we
you.
can put as many people as possible.
Hey, Louis, really quick. We're gonna do, since we're gonna do strictly English for you, we're gonna finish the whole presentation,
Okay,
and then we're gonna turn over, and we're just gonna repeat the same thing over
Okay.
to them in
that's
Spanish.
fine.
So since we started with you, we're gonna go over everything in English, and then I think that we could probably cover almost everything in the next 20-30 minutes.
Okay, it's fine.
And then,
It's
so,
fine, perfect.
you got payment out, right? Just really quick, for payment, the reason I put 300,000, that doesn't mean that's where you're gonna
Right.
buy it. That's close to the average sale price here in Berwick.
That's
So
the
I-
price for the houses and stuff here?
Average.
Average Berwick.
Yeah.
So I know you were looking like
I'm going back that way.
So obviously, whatever purchase price you end up choosing at, that's gonna factor your payment obviously lower.
Okay.
So I know you covered the payment like at 2,100.
Right.
We're gonna cover what you feel comfortable paying.
Okay.
Okay, so part of buying a house is general closing costs, right? So we look at how much money you have for the down payment, but then we also have to factor in closing costs. Some of the closing costs are gonna depend on where you buy the property. If you buy a property in Chicago versus Berwyn, Cicero, Hillside, your closing costs tend to be a little bit higher in Chicago because Chicago makes you pay a sales tax in a sense, right? So it's called transfer stamps. So here, using this example, if you were to buy in Berwyn, we eliminate that fee. Some of your other fees are gonna be title fees, right? So title fees is a title company that is chosen by the seller's attorney, right? Their job with the title company is to be the middle person between you, the buyer, and the seller, okay? So the title company's job is to make sure that the title they're giving you for the property is clean, right? Any lien that is associated with the previous owner is paid off, right? And they're guaranteeing that the owner of the property is actually the owner of the property selling it to you, not some random person that has
Okay,
no
gotcha.
rights.
Yeah, I heard of the scam.
So, yeah, so generally speaking, your title, fees are about $3,300, right? Origination fees, this is gonna depend on which bank or which mortgage company you work with to get your loan. We don't have any origination fees, but on average, some banks do charge about $1,200. We have your annual insurance, in this case, using State Farm as an example, $1,000 a year. Part of your taxes and insurance are included in your payment. We're gonna hold what's called an escrow, right? An escrow is a savings account that the bank manages in order to save up the money for your taxes and insurance, right? So every month that you make your payment, they're gonna take the portion of the taxes, portion of insurance, and they're gonna put it into this account. By the time your taxes and insurance are due, they have that money already saved up to pay those taxes and insurance. So your escrow account reserve is gonna be about $2,200. So this is your own money that we're just putting aside for future use. Home inspection, you wanna do a home inspection to make sure your property is good. A lot of times you have the option to waive it, we don't recommend it. We highly encourage you to do a home inspection, just so that you know what's wrong or what's good about the property. Appraisal, right? So this is a fee that you pay within your loan process.
Okay.
The appraisal is a report that the bank orders to make sure that the house that you're buying, using $300,000 as an example, is worth $300,000. If the property comes in that the value is $290, we can use that report to renegotiate the purchase price with the seller, okay? If the value comes in higher, you're buying it for $3, and the value comes in at $310, $305, nothing happens, we don't disclose that to the seller, you know you're buying
Right.
a good deal with the property with
Right.
some equity.
your attorney fee, okay? So you do need legal representation to buy a property, just because, you know, Chris, he wants to make sure that everything is good, title is clean, you know, there's no issues with a lien from the property from the city that shouldn't be there or anything like that. So attorney representation, $500. Now, the other thing that we're gonna do is the per diem interest. Per diem, the day you close, the bank is gonna start charging you interest on that 30-year mortgage until you pay it off, right? So it's like, wow, as soon as you get those keys in the hand, you're gonna start paying that interest. The way that they're gonna charge you interest is that they're gonna charge you interest per month, right? So let's say there's 31 days in a month, and you close on the 29th day, they're gonna charge you 2 days of interest to close out the month for that particular month. Okay, so depending on when we close, that per diem interest is gonna be there. Other general fees for lending, about $250. So estimated closing costs, $96.50. Again, this is just an estimate, but ballpark, that's what it would be. So using this example, we're looking at down payment of $10,500 plus closing costs of $96.50. You're all in for $20,150. Okay, now that's a lot of money, but we're not focusing on that because as a real estate agent, they can negotiate credits, right? Closing cost credits, repair credits. So here, you know, we're getting a $2,500 miscellaneous credit. We're getting a credit for the property tax bill for Cook County. So the reason you're getting a credit for property taxes is because property taxes are paid a year behind, right? So in 2022, we're paying taxes that we lived in 2021. Let's say you close right now, you didn't have anything to do with the property last year, so the seller has to give you a prorated tax credit to offset your future taxes for last year.
Okay.
So that credit would be about $4,200. So once we apply these credits, your cash to close, down payment, closing costs, $13,450.
So, Louis, really quick, I mean, I know it's a little overwhelming, like a lot of the credits, but I would say, just to kind of summarize, whatever your sale price is, keep in mind that you're gonna be doing your down payment percentage, which could be between 3 to 5%. Keep in mind there's closing costs. I mean, we could break this down in the future again, but a lot of buyers don't know when you buy it's like when you buy a car. It says 0% down. You still end up paying title fees, plate stickers, there's also registration, right?
Yeah.
Same thing when it's a house.
But you got government help for all the closing costs and everything too, right? How do that work?
You do and you don't. There's some assistance out there, but it's basically driven based on how much income you make, right? So as an individual, if you make more than a certain amount, you might not qualify. The other thing too, depending on where you buy, so it might be a low to moderate income area, you might not qualify. So if you do get government assistance, there's a lot of negative aspects to that because your interest rate's a lot higher than you normally would.
I would say, just to summarize, because we can literally talk a whole hour with the financing, but understand down payment, there's closing credits.
Okay.
It's all driven with the final sale price. We are, as the realtors, we negotiate seller credits when we start negotiating the price, which we'll talk about.
Okay.
Your tax credit, you will always get a tax credit in whatever county you're buying in Illinois, because property taxes are paid in arrears. I would say be prepared, because I think you had mentioned you're gonna be in the price range closer to $250.
Something like, yeah.
I would say, depending on the credits we get you, be prepared to pay anywhere between $8,000 to $12,000 total out of pocket. We'll work on seeing what credits we can get you, and it could also come from the seller, it could come from government assistance. But I would say be prepared for your payment, which we'll cover once we get you pre-approved. But just understand that there is closing costs. That's the biggest thing we want buyers to understand, that it's not just down payment, there's closing costs involved as well. So a lot of people think, well, how am I gonna come to closing with $12,000, $13,000?
Right.
It's because of the closing costs that you have to factor into your actual down payment, okay?
Right, and like he said, we'll work on those.
But I'm saying, but like you said, if the seller won't out, he'll pay it for you, right?
Yeah.
In some cases, yes.
The thing about it is the market right now, it favors sellers because there's so many buyers trying to buy the properties.
Right.
So we'll cover that
Okay.
once we start actively looking at properties. So I think that's the biggest thing we want you to understand is the breakdown of payment,
Yeah.
principal, interest, taxes, insurance, and understand where the closing costs are coming from. this is not gonna necessarily be directed to you. Every scenario is different. It could be significantly less, it could be significantly more, okay? I think at this point, I don't know if you got anything else you wanna cover, Louis, about
No,
financing?
that's pretty much it. I mean, once, you know, you find a house, we know which program you're going with, we can break this down more into detail for your scenario.
Yeah.
So you can understand those numbers. Yeah, this is just kind of like a general idea.
To me, these slides are probably the most important thing in the presentation, because we're gonna talk about getting you pre-approved, which is what the lender, running credit, income, savings. And then, once we know your payments, that's where you know what your buying power is. And then we have to verify your assets to see how much of a down payment you could actually put down. Us as a realtor, we'll handle the negotiating the credits and things like that for you. So once we have you pre-qualified, we'll put your scenario to your pre-qualification. So the next thing is, thank you, Louis. Step two. I'm gonna make it a little quicker. So step two is you're gonna deal with the real estate brokers. I myself am a real estate broker. Victor himself is a real estate broker. Lisette is a real estate broker. So we are the ones that handle everything with the house. Okay. So the most important thing is we are the ones that put everything together. We're gonna start figuring out what are your needs, discovery questions, where you work, where your kids go to school if you have kids. You know, what locations you feel comfortable. But the most important thing is once we know what you qualify for, even if we tell you, Scott, you're approved for a $2,000 mortgage, that doesn't mean that's what you feel comfortable paying. You might be like, you know what, guys, I only want to pay a mortgage at $1,400 a month. So once we break down the location, we'll be able to find you houses that are within your monthly, what you feel comfortable paying, with your down payment that you feel comfortable paying. And then we obviously get all the discovery questions, and we start looking at properties within the location you're looking for. Okay, we could maybe attack. I know you covered Hillside, Berkeley.
Yeah.
We could start looking further out to, you know, Melrose Park, Addison. We could even get into DuPage County. It's completely up to you where you feel comfortable buying. We're the ones that are gonna start doing the scheduling. We're gonna be doing all the offers. So, you want me to just hand it to them? You guys good? So here's the thing, us as the real estate brokers, we specialize with the houses. We're gonna be the ones that are gonna be doing the searches for you. We're gonna be doing the appointments for you. You're gonna be meeting us at the properties to view the properties. We're gonna be the ones handling the offers, negotiating the sale prices. We're gonna be scheduling home inspection, appraisal. Once we're getting down to the finish line, we'll do a final walkthrough with the property as well. So basically, us as the realtors, we put everybody together. So all the communication goes from you to us. We relay the communication out to the rest of the parties involved. So I mean, you could read over this a little bit more, but you're gonna see that these are the things that we as a brokers cover. You wanna chime in, or you want me to take care of it?
Well, you could, since it's recording.
Oh, okay. So here's the thing. Again, real estate brokers, we are the ones that are gonna do all the searches for you. We encourage you to search online as well. But just so you know, we have a system called MLS. It's the multiple listing system. Only real estate brokers have access to that. You, as a buyer, you'll have access to third-party websites that are like Realtor, Zillow.com, Redfin. We encourage you to use those. Share the properties you find online, because that helps us pinpoint properties you're looking for. We might be only looking in Hillside, Berkeley for you, but you'd be like, hey, you know what? I really like this one in Berwyn. What do you think about this one? Boom, we start attacking a different market. So that helps us understand what you're looking for, okay? We also have a personalized app, HomeSnap, that's a mobile app. I don't know if you're pretty tech savvy.
I'm texting them, care less better though.
Yeah, I mean, if you are, great. If not, we're gonna help you out with that. But I mean, there are a lot of resources out there. Here's where it's a little tricky. We also handle all the negotiations. How do we negotiate? We're gonna study the market for you. If you're buying a 3-bedroom, 2-bath bungalow, you know, for $450, but it's not renovated, and the closest thing that's sold is for $395, we're gonna make you aware of that. It doesn't mean we know exactly what the house is worth. We just are gonna give you perspective on value of a house. At the end of the day, what a house is truly worth is what somebody's willing to pay for it. It could be worth only $350. You are the next door neighbor, you wanna pay $400 for it? That's what the house is worth, okay? But we're gonna help position the offer to try to win the deal too, because the way the market is right now, as much as we wanna haggle, we wanna negotiate, I'm sure you guys are seeing on the TV how there's such little inventory. Even for vehicles, there's markups. It's happening in real estate. So we really help you position your sale price as competitive as possible. We're gonna help you negotiate your closing credits. We're gonna tell you how much money you need to put up front, which is earnest money. This is part of your down payment. So as soon as you actually get an offer accepted, you have to put it's usually about 1 to 2% of the sale price as a down payment, okay? Closing date, if you're gonna buy as is, home inspection, things like that. So basically, this is the sales contract that every realtor uses basically in the state of Illinois. We fill in the blanks to the house of your, to fit the offer that you're trying to submit. And obviously, we're gonna factor in price, credits, and closing date. We'll get Chris to he's gonna cover briefly what a sales contract consists of and what you're protected in. So go ahead and chime in.
Sure. Thank you, Erik, and thanks for having me here. One of the things I like best about working with Erik and his team and the other professionals in this room is we're all very good at communicating. And so once I get a contract from Erik or Lisette or Victor, I start analyzing it immediately, and then I start communicating with our clients and with the other attorney in the transaction. And so I review the contract once it's put together by the real estate agents, and I'm reviewing it for the location, I'm reviewing it for the parties in the transaction, for any contingencies, anything particular about the contract. So the contract itself is really good because it lays out a schedule from beginning to end that's fairly predictable. So within the first 5 days after a contract is accepted, that's called the attorney review phase of the contract. During that phase of the contract, each attorney reviews it to make sure that the real estate agents know what they're doing, but we know that they do. And so we propose modifications to the contract. Sometimes there's something that needs to be corrected, sometimes there's something that's particular, sometimes we need to add another contingency to the contract that's not included in the standard contract that we use. Also within that first 5 days, you'll be scheduling an inspection and going to the property and meeting with an inspector and having them look at the property to make sure that there's no major defects with it. And so that all gets communicated and filtered through the attorney, who then will communicate with the other attorney and try to negotiate either repairs or an additional closing cost credit or a price reduction, or you may say at that point in time, you know what, there's too many things wrong with this house, we're gonna cancel the contract and we're gonna start over again with the process. Once those first 5 days are over, unless they've been extended and agreed upon between the parties in the transaction, then that first phase of the contract is over. After the first 5 days, the next step in the process is to really start with the loan approval process. So the contract requires that you pay your fees and file your application within the first 10 days of the contract. After that, your lender will help kind of move you through the loan approval process, and an appraisal will be ordered and a value will be assigned to the property. Most of the time, the value that the appraiser comes up with is either the exact purchase price in the contract or a little bit above it. Sometimes the price is below the sales price, and then we need to renegotiate things. And once this phase of the contract is over and your loan is approved, then you get an official, what's called clear to close. And once we get that, we can schedule your closing. And so, usually the closings are held at a title company. There's many around the area, and then we physically go in person, and we sign all the documents for the closing. And that's it.
Really quick, Chris. So
Sure.
we're gonna cover a little bit of the closing towards the end.
Mhm.
So I would say just on your bulletins, on average, how long does your sales contract from start to finish take, roughly, just so you know?
So in general, most contracts take about 60 days.
Okay.
However, it's not uncommon for it to take 30 days or 45 days and sometimes longer if there's an issue with either the property, or there's an issue with
Yep.
the buyer's credit, or sometimes they have to have a certain period of time that they're working at their position. So usually it takes about 60 days from when the contract is accepted to the closing date.
Just so you know, when we're negotiating, typically the sellers tell us to try to get a close in under 30 days.
Right.
Sellers don't like to wait, so like, if perfect world, 60 days would be great, but usually the sellers are like, hey, we'll take your offer, but we want you to close in under 30 days. With lenders that we know, we can get that done. There are other traditional lenders that delay a lot more, so that's the advantage you have with some of our team members. I would just tell them a little bit, just to kind of find, just attorney review period, your time length that he has for
Sure.
review legal advice with you.
Yeah, and let me just add that most of the contracts that Erik negotiates and his team are 30 days, and that's because the people that we work with are so efficient and so good at communicating, so we actually get to the finish line quicker. In terms of the attorney review, that's the first 5 days of the contract, and that's oftentimes when, like I said before, I'm reviewing the contract, making sure that I understand, you know, the client themselves, whether they're married, single, divorced, whether someone else should be added to title. And then I also look at the tax situation, the property tax situation. Every property has its own unique tax situation, based upon the location, based upon the assessed value, based upon, you know, what year we're in and when the property was last reassessed. And everything is negotiable. It's one of the key takeaways I want you guys to have is that, you know, everything in the contract is negotiable. It's whether both sides can agree or not. So we could always, it doesn't hurt to ask, and usually we will ask, and the worst that could happen is that the other side says no.
Yeah, I mean, just so you know, everything that's agreed on needs to get put in writing. He's gonna be your guy that's gonna basically put everything together. I don't know if you wanna cover a little bit of other things you may do outside of just 100%
Sure,
real estate law?
so primarily I do real estate law and residential closings in particular. I also do estate planning, so I can help you put together a will or a trust. And as an attorney, I have a network of other attorneys, so if you ever had, you know, another issue, personal injury type case, or something else that you needed a referral for, I would be, you know, a good person to get in contact with to kind of put you in touch with the right people.
I would say the other thing that he specializes in, not only buyers, if you're looking to sell a house,
Yep.
that's one of his specialties as well. Like if it's an estate, somebody passed away, you're looking to sell a property. I don't know if you get into like pre-foreclosure, I don't know if that's anything you.
I don't really do much of that, but of course I represent buyers and sellers just as you know, as the.
A quick question for you. Now, what
Sure,
about the
Scott.
foreclosure situation?
Uh-huh.
Is that a better deal to buy than from a person to person? What's the difference?
Well, you know, every situation is different. Certainly something, a property that's in foreclosure, you know, you may get a discount on it. And that might be true under normal circumstances, but nowadays, because the market is so competitive, and Erik and his team can speak more to it, it might actually be more challenging. There might be more competition for that property. So although it's a distressed property, you know, there might be many more fish in the pond trying to get the same thing. It also, the closing process is quite different, because usually the lender isn't, the seller's lender might be involved if it's a short sale. If it's already in foreclosure, there might be legal proceedings that have to be taken care of beforehand. So it's an option, you know, but it has its own unique qualities to it. At the
I
same
would
time.
say to your question, just understand that foreclosure, you're buying a bank-owned property. It's been taken away from the previous owner already. So the problem with those is it's being sold 100% as is.
Right.
If the conditions are in rough conditions, there's no running water, no electrical, that's how you're gonna buy the house. So that's the reason you're buying under market value. But understand that typical first-time homebuyer financing doesn't allow that, because the bank wants you to buy a house that's in good condition. So if you do buy distressed property, I don't know if you saw the slide, that would be more of non-occupant financing, which would require a much higher down payment.
Oh, okay.
And we'll talk about that once we're searching. I think for the most part, he covered most of his contingencies. So he discussed about the first week of the attorney covering, reaching for attorney, looking for legal advice, basically to review the contract. Inspection, you'll have the right to negotiate your home inspection if we find major issues. His loan application, there's gonna be deadlines you need to meet throughout those 30 to 60 days.
Gotcha.
So that's what the contingencies mean. And then mortgage contingency, you're expected to get your loan cleared within a certain time period based on the date of the closing.
Okay.
What does that mean? That means you're gonna have to turn in all your documents that the lender's requesting in a timely manner.
Mhm.
So it can't just be like, oh, well, you know what, I'm going on vacation for 2 weeks, I'll give you my updated bank statements next month. Like, no, the time is clicking, so
Okay.
we really need to get all the contingencies cleared. And that's one thing that Chris does really well. He'll send you communications and be like, hey, Scott, we have until this date to get a clear to close. Where do you stand with your lender? That's where we get involved. We talk to Louis and we give everybody an update, okay? Home inspection, Hamza?
Yes.
I think, home inspector, just so you know, anytime you buy a house, we always advise you do a home inspection. So he's gonna talk a little bit about the key points and the things he inspects.
Okay.
How you doing? So, it's very important to find a reputable home inspector. Definitely do your due diligence. Google reviews, Yelp reviews, see how the reputation is online. Types of inspections that I do like commercial inspections, but obviously residential. I do mold, radon gas, lead, water, what's that called? Lead-based paint, sorry.
Yeah, lead-based paint.
Yeah,
radon
lead-based
mold.
paint. A typical home inspection costs between $400 to $500 if it's a single-family home. Condos are a little bit less because we only do the inside of the 4 walls. Generally, a typical home that's 2,000 square feet or under takes me about 2 hours, 2.5 hours. And then as far as scheduling goes, basically a couple days in advance. I'm very flexible with that.
Yeah,
The roof, you do all on the roof and everything too?
We're gonna talk about that. So we're gonna talk about the things to go. So just basically, he has different options for inspections. The bigger the house, the more he inspects, the higher the cost, basically. Scheduling, you run it through, again, us, the realtor. If you wanna go with Hamza, if you wanna shop around for anybody else, there's a ton of home inspectors out there, but honestly, Hamza's one of the ones that he really emphasizes on getting reviews. And I would say probably like 99% of your reviews are probably 5-star. The only reason you don't have a 5-star is probably because somebody did a 4-star. So they have, the reason we use him, he's a really reputable home
So
inspector.
see, my goal is, like I say, I go through it like you'll go through it, but you probably certified, right? See, I go through it on the roof, windows, doors, and that foundation.
Well, the foundation is extremely important.
That's my main thing.
Yes.
Here we go. So look, these are the top 10, the 10 things he looks at. So if you want to break it down.
Yeah, so for foundation, like the only thing with finished basements,
You won't be able to notice it.
but the tools, the proper tools, I use an infrared or a thermal imaging camera. I scan the walls, and if I see any discrepancies with temperatures, I will verify it with a moisture meter. That's how you can tell if it's leaking or not. With the roof, I use a drone. Basically, it helps me so much. You can zoom in on them, and it's safer that way. Windows, definitely. Wood windows, believe it or not, are the best types of windows to have.
The wood windows,
The wood
the
windows.
older time windows.
Yeah.
Wow.
Vinyl windows, they have a lot of broken seals, with the
Yes,
falling condensation.
yeah.
You can't clean them, but there's companies out there that will be able to fix those seals. HVAC system, so the only time I cannot turn the AC on is during the winter time. It has to be 65 degrees or higher. But yeah, I go through the entire HVAC system, making sure that there's air registers in all the rooms, return vents, house a filter, things like that. Electrical, I generally take the electrical panel off to make sure that all the wires are, there's no corrosion, and it's wired properly, only one wire going into the breaker. Rehab finishes, that's my specialty. You know, so when I go into a home and it's rehab, I know exactly what to look for and tell you if it was done not so well. Exterior is also part of it. With the drainage, I offer sewer line scopes, just to see if there's slow drainage in the tub. I'll feed it into the main drain to make sure there's no tree roots that have penetrated in it. And water issues, basically, 9 out of 10 times sellers are gonna say the basement has never gotten flooded. I go there and I make sure I find water stains, because every basement will get flooded one time or another. It's just how you fix it. So yeah, that's basically what I look for, and I'm one of those inspectors that I'm very detailed, and I inspect as if I'm buying the house. That's what sets me apart.
He's really detailed. His inspections typically take between 2 to 3 hours. You know, you have other inspectors that sometimes are in and out within 30, 40 minutes. So one of the things that's nice about it, he's gonna give you a full detailed report with photos and recommendations. Now here's the thing, keep in mind, home inspection is for you to know the conditions of the house.
Right.
It doesn't give you 100% grounds to expect the seller to fix everything.
Right.
It's really so you have peace of mind of what you're getting into. You get the age of the furnace, age of roof. So if there's really major problems, that's where Chris was telling you, it gives us grounds to also cancel because there's too much liability with the property. So keep in mind, we can still use the report to negotiate further credits and repairs, but we can't guarantee you're gonna get everything in the list taken care of. We look for the major ticket items, which is typically these. And like I said, I mean, he can only do so much. He can only see what's visible. I mean, is he gonna miss little minor cosmetics? Yes. You know, we're looking for the big problems that you're gonna have issues, you know, in the short term, not long term, like more short term, so you don't inherit like a bad furnace in your first year, things like that.
Right, that doesn't answer the question. So you pass everything and you buy 6 months later the furnace ground. Who's responsible?
Well, that's the thing. I mean, he's gonna.
Yeah, so unfortunately, alright, so we could do the roof.
Okay.
So if the roof leaks
Yeah.
after and I don't miss it, or I miss it, I have insurance, errors and omissions and general liability, generally, but say if the furnace is, I wanna say 80 years old, just say, and it goes out, but it was working at the time of inspection, unfortunately.
Just so you know, Scott, he's gonna give you probably recommendation, this is gonna go out, but if it's working by law, he needs to state that it isn't working. Or what we do to protect you is we're gonna offer you third-party home warranties through American Home Shield. That's what we work with. They're not expensive at all. You usually pay between $600 to $800 and it covers you for a whole year, and you literally only pay $100 deductible and you get full coverage, or you even get replacement costs. So that's what we do to not only as a backup to his inspection. We'll offer you warranties to potentially cover after closing, so you get more peace of mind
So
there.
the homeowner don't share none of the blame, huh?
Well, keep in mind, I mean, you sell a used car and the transmission goes out 6 months later, you think you're gonna take liability for that?
Well,
You already bought it.
I'm bringing it back.
If it's brand new, absolutely.
I mean, if it's used,
Yeah.
but you still got some type of legacy with it. You know what I'm saying?
Yeah.
I mean, it ain't like I'm bad and go take it to a transmission shop and say, take the trash down and look at this and that, make sure this is one. No, you still gotta give me some type of legal way room with it. That's what I wanna know.
Well, I guess this would be a question for you, Chris. Is there any liability after closing?
Sure. So one of the things that I didn't mention, but one of the key parts of the initial sales contract review process are the real estate disclosures. So by law, there's something called the Illinois Residential Real Property Disclosure Report. It applies to single-family homes and condos, and I believe under 4 units as well. And basically, it says if the seller has actual knowledge of a material defect, they're required to disclose that before the buyer even, I think, submits the offer. And so if someone lies or misrepresents, and say for argument's sake, there was a flood in the basement, and they knew about it, and they didn't say anything about it, and then you close. If you can prove that they knew that and they lied to you, then they have liability. However, in general, there's a Latin phrase or term, it's called caveat emptor, it's called buyer beware. And so buyer beware means get your inspection, get a home warranty, negotiate the best deal that you can, and once you buy that house, unless there was something that was supposed to be disclosed that wasn't disclosed, it's all on you. Now it's your house. So there are legal protections, but using solid professionals and getting a home inspection and going through it in a detailed manner is the best form of protection that you can have.
I think this allows us to segue into insurance, homeowners insurance.
That's right.
So that's gonna cover a little bit of
Yeah.
peace of mind.
Yeah, so we offer a little bit of extra protection after you guys become the homeowners.
Okay.
Ya casi terminamos, de todo modo le vamos a explicar bien lo del financiamiento, que es lo más importante.
Okay.
So with insurance, a lot of stuff here, obviously the biggest factors you want to look at is gonna be your coverage. Most important way it looks at is the cost. You know, what is a claim, what isn't a claim, and then your liability. So, kind of skipping on those, the coverage. A lot of these is what we're gonna base it off of. We go, your market value versus replacement cost. So the market value, what you're gonna be looking at is the price that you're paying for it. So that can fluctuate based on where the house is. There's a lot of extra factors that go into that, and that's what these guys help you out with. What I'm worried about is the replacement cost. What is it gonna cost me to replace that house from the ground up? And that's what they look at. So those numbers may not match it off, because it's two separate numbers.
Right.
You can have one house that's gonna cost us, $500,000 to build. In one area, it's gonna cost you $200,000. But if we take the exact same house, put it in a different neighborhood, that same house is not costing you $1 million. So that's a market value, which is what you're paying for it, what you're gonna buy it. Our insurance, or what you want, is gonna be your replacement cost, and that's the number you look at. So you don't base it off of what you're paying for, we go based off of that. Which brings us to the next part. There's two types of ways that insurance pays you. They're gonna pay you the replacement cost or actual cash value, or a percentage of replacement cost or actual cash value. When it comes to a home, you want replacement cost. You want 100% replacement cost, and that's actually a lot of things that get tied into with the lenders, that they won't give you a loan unless it's 100% replaced.
Okay.
Actual cash value is just like a car. As soon as you drive it out the lot,
It's done.
it's done. It's appreciating value. Actual cash value, they'll look at the age of the home, they'll look at the last time it was repaired, updated. Everything has a year of age, it depreciates, and it takes it away, and that's what they pay you. So you might get stuck, putting up a big portion of your repairs. Usually it's the cheapest, so people, sometimes they get snuck through. There's a lot of questions when it comes to that, so that's why you have to be very careful when you're looking at how that policy is gonna pay out. Is it gonna pay out on a replacement, or is it gonna pay out on an actual cash value? Endorsements and extra protection, again, based on what all these guys were talking about, we're here to protect you. We're here to protect your home. It's one of the biggest investments you're gonna do. If you're the biggest purchases, so we want to make sure it's protected properly.
Okay.
We have endorsements where we're adding extra protection. We're adding, if your basement floods, we have the backup and sewer and drain endorsements. We have, sewage lines protection. We have, they were talking about the warranties. There's certain companies that we do offer where we'll offer extra protection for appliances, your heating units, your compressors, all that good stuff. That's something that you have to sit down, talk to an agent, make sure that you're getting the proper protections to make sure you protect all your stuff. Same thing with the liability from the last slide that I was telling you about, you now have a liability. So now you have something that you own. So it's also a liability where you own a piece of property. Chris will let you know, it opens you up to certain liabilities. If somebody's just walking and trips in front of your front lawn, they break their leg because you didn't cut a bush right, it's a liability.
That's no problem now.
It's your problem. We're there to help you out. We have certain coverages. There's different lines of coverage. It's not just, it's not like there's a laundry list of protection that we're gonna have for you in case of any type of event. And because of that, we wanna make sure that we're gonna protect you as much as we can. You already bought the house. You did the hard part with these guys. We wanna make sure you keep it. When it comes to claims, you also gotta keep in mind a house is just, like a car. You have to do your maintenance. You have to cover your maintenance. So there's a difference between maintenance, regular maintenance, wear and tear, and a catastrophic loss or unexpected loss. We're not a maintenance company. We're not here to insure maintenance. If you have to replace your roof and your roof is 90 years old, hey, there's nothing we can do.
But that's my inspector problem now.
Right, well, yeah, that's
We got a problem now.
even if you had it, right? Let's say you bought it, a brand new roof, but then we go 40 years in the future, and you never replace that roof. now it starts leaking, that's where you.
That's understandable.
That's an issue, so you might put a claim in, and that's where you start hearing people getting declined. Cause it's, the difference between maintenance, was it something you were supposed to keep up with, replace, change, or did it fail? Was it supposed to fail? No, it failed, that's when the insurance company comes in, and that's when they give you the new roof.
No, quick question before you go on.
Yeah.
Say like you get water damage today, right? You pay out. 4 months later, they come that water and stuff again. How many times you pay out on that?
We'll pay it out if it's per occurrence. So as long as you got water damage, we pay it. You can prove to us that you fixed it and it got damaged again for other reasons.
I mean, like the sewers and stuff. Who problem would that be?
So we have backup sewer and drain endorsements.
Okay.
So if your sewage comes back up and it damages your wall and your property, we have coverage for that if you elect to choose it. If you elect it, we pay out. You're good. We send in a team. You get cleaned up. Everything is fixed. Back to normal. A week later, there's another storm.
Same
It
thing?
happens again. We pay it again.
I thought they had a time limit on how many times they're gonna do something. They keep doing it, huh?
No, as long as you have coverage, and
Just understand that those what do you call them, endorsements, it makes your premium obviously higher. as well.
Right.
Right. And that's stuff that you could all discuss, and it's a menu. We'll
Yeah.
have your basic policy, which is the coverage and everything to get you through. It's something that you can discuss. It's already overwhelming trying to purchase your home. So what we'll do is we'll give you a basic policy, go over it, tell you what you have, but then also let you know that we have other options available, that once the dust settles and you want to sit down again and let's review what the potentials are, what your risks are, and make sure that we have everything covered, we can always adjust it and we give you the cost difference for it.
Cause I notice now a lot of stuff starting to flood that didn't flood before.
Yeah, we've seen it all over the place.
I think that's a big one that a lot of homeowners don't know about, the sewer backup. I don't know if you guys go as far as covering the whole sewer into the street, or.
We have endorsements for that, so we only cover the sewage. We cover the sewer if the backup sewer and drain covers the damage that happened caused by the water.
Yeah.
We do have an extra endorsement, which is the service lines. So if there is problems with the sewage going out to the city, well, we give you that. So like if you have tree roots and stuff like that that damage your sewage, after your property line, we do have extra coverage.
Now, not to be confused with actual flood zones.
Okay.
So like out in like River Grove, Franklin Park,
Westchester.
North Lake, those are areas of low elevation. Those through FEMA, you require to have additional flood insurance.
Okay.
Correct.
So that's completely different to like your basement flooding here in Cicero to you live in an area of high, flood risk basically.
So yeah, you'll have you have three types of potential water damage in your basement due to that. Probably just four actually. There's going to be your backup sewer and drain, which is water that comes back through your floor drains, bathtubs, sinks. That's what we protect. You have seepage, which is problems in the foundation. So you have cracks, and there's water coming in through the foundation. We can't cover that. If there's water coming in through your windows, through your door, that's flood. We can't cover that. That's where if you're in a flood zone, you have to work with. We offer with FEMA and stuff like that. That we work with a third-party company to get you that flood insurance. So that's what you're.
So basically, the insurance almost higher than the mortgage, way it sounds.
And you're not gonna get blindsided like you're gonna close and find out you're in a flood zone.
Right.
We'll tell you beforehand, like, hey Scott, this isn't a flood zone. That's the reason it's 30,000-40,000 less than your typical neighborhood in maybe Westchester. So you'll know that beforehand if you're willing to take that risk. And I mean, sometimes it is worth the risk. You're gonna buy it under market value. Just make sure you got proper coverage so you don't have any risk. You know what I mean?
So see, like I said, I stay in the hillside. I stay, you got the fire department, you got the post office. Now something happened a couple years ago, never happened. I've been out there 20-some years. I used to work for the village for 11 years. The violent 13-6, which you believe the water got up there?
Oh, I knew about, I heard about that. Yeah.
Got up there. Now you figure, how did it get up there? Right next door to the fire department, they out there looking too. And 2 minutes later, it was gone. So some of us went to sleep on the job, I would figure. Because they flooded the whole Eisenhower Expressway too. And which you couldn't figure out, that the water should never got that high.
Absolutely, yeah. And that's where we get to the next one, you get the discounts. So we work with you as well to see what's the best price we can give you. We get discounts based on your alarm system if you decide to get one. We have discounts if you have multiple lines with certain companies, with State Farm or with other companies is the same thing. So we try to minimize that expense for you as well. The next one is, renters both, if you're renting now, it's the best time to start getting your renters already, just to make sure, cause you build.
I got it.
Yeah, so you build credits with us, so the great thing about it is we convert you into a homeowner.
Okay.
So it gives you that continuous history with the company.
Okay.
Also, if you buy a multi-unit property where you live in one unit, you rent the other, you wanna make sure your tenants have rental insurance to protect all their items. And then the last part that we have is, triangle protection. So now that you've purchased it, you wanna make sure that you keep it.
Right.
So the best way to do that is we're getting your home insurance, that we're covering the home, make sure, any kind of catastrophic loss. What happens if you stop working due to disability? You can't afford your house, you're gonna lose it. So you make sure we get your disability policy to make sure if something does happen to you, your family, you still keep your home. The next option is a little bit a worst case scenario. We have life insurance. If something does happen to you, we wanna make sure your family still keeps that house. We wanna make sure that nobody gets displaced, and we make sure that's covered for them.
So they don't have no life insurance, that something happened to the previous owner, the next name automatically own the house, or they still gotta be paying?
Well, again, that's not gonna be based on ownership, right? That's where, if you pass away, now, I'm pretty sure Chris can talk more into it, where there'll be more issues on how was it set up.
Right.
Can your spouse, can your family afford to stay in the house? Will the mortgage approve them based on the credit? It could be a mess.
Yeah.
Where we have something protecting you, or a life policy that just as soon as something happens, your house is paid off and your family gets to keep it. So yeah, that's pretty much what I'm about, just making sure you keep the house.
Okay.
And I think the biggest thing about State Farm is they're the most reputable company right now out there. So we always ask buyers use a reputable insurance agent. And I would say one thing you probably want to tell them is a lot of people have the misconception that just because he's in the city, he can insure you out in the suburbs.
Oh, yeah.
He can insure you probably in the whole state of Illinois.
Yeah,
Right?
Okay.
I work the entire state of Illinois, I work
Okay.
the entire state of Indiana, so wherever you purchase a house in those
Yeah,
states.
cause I got them 20-some years plus already.
Perfect, yeah, that's gonna help out a lot.
20-some
With
years.
State Farm, right?
Yeah.
I mean, you could even have multiple policies with different agents.
Mhm.
You could have your home, whatever. I mean, it's
Yeah, and I would work with you, as well with your agent, to
Okay.
figure out how we can set you up.
Yeah.
Make sure that other questions are answered, we could set you up correctly.
all right. Now we're basically gonna just summarize it really quick to close.
Okay.
I mean, we've covered approval, we've covered payments, closing costs, the inspection. We've covered what the realtors do, insurance. So now we're basically down to the closing. All right.
Okay.
So I think just to kind of summarize it, you want to know if you're going to go in by yourself or you're going to go in with your spouse.
Right.
I think I would just say if you want to cover just the type of ownerships, just so we can kind of finish the presentation for him.
Sure. So there's all different ways that people can own property. So if it's a single person, then they take title to the property individually and they're the only person on title. In that situation, it's usually a good idea to do some estate planning or to do some, to anticipate what would happen if something were to happen to you. How would that property get transferred to your kids, to your other family members? Then there's the different situations if you're buying the property with a spouse. You can take title, what's called tenants by the entirety. And so that is like a little basic estate planning that's already built into the process, where if you were to pass away, the surviving spouse, the spouse that is still living and living in the home, will own the property 100%. And then, if it's if you're buying property with someone else who's not your spouse or not related to you, there's different ways that you could own the property combined. But in a typical first-time home buyer situation, it's either going to be that you're going to own the property individually, or you're going to own it with a spouse or another family member. And then the question is, what's the best or most advantageous way to take title to the property?
Yeah, so I mean, that's bottom line it.
Okay.
Once you get to the closing table, by then you'll know how you want to take title, how you want to take ownership. I mean, we'll tell you what your final figures are that you need to bring to closing.
Okay.
We'll tell you where your closing location is going to be. I would say give yourself at least, all closings only take place during the week, Monday through Friday.
Okay, so off day.
What's that?
It'd be an off day that day.
Yeah. So if you need a call off, we'll give you a couple of day notice, and then just give yourself at least a 2 to 3 hour window for your closing.
Okay.
I know now with COVID, closings are a little different. They've done virtual closings, over the phone closings. I think things are starting to get back to normal. But again, just know that before closing, we will accompany you to do a final walkthrough on the property.
Okay.
We wanna make sure that the house is free and clear of personal property, if they're gonna give us possession. If they're not gonna give us possession, we'll negotiate some type of rent or lease back from the owner. But bottom line, we're gonna be there for every step of the way.
Gotcha.
Come to closing, you'll know what your final down payment is. The lender will tell you, hey Scott, this is what you got left over. You maybe need to bring another $6,000 check. And then basically, we give you keys and you're officially the new homeowner.
Okay.
And we're not done with you. So just really quick, after closing, just so you know things that we do as a team, we're gonna keep an eye on your property to make sure you get all the tax discounts that you should get through Cook County or DuPage.
Yeah.
So if you're a homeowner and it's your primary residence, we wanna make sure you're getting your homeowner discount. For senior citizens, if you're 65 and older, we make sure you have your senior discount. We don't do tax appeals, but we'll tell you where your local township is at, so you can do your tax appeals, and that's free of charge. You can do them every year. So if you're, for example, in the hillside, you'd be part of Proviso Township.
Right.
If you're Berwyn, you're Berwyn Township.
Okay.
So we're pretty versed on where your township is. You're gonna be hearing from us, holiday mailers, we're gonna send you annual mailers, we do client appreciation event. And most importantly, we do ask you give us referrals in the future, and then you give us final reviews after closing.
Gotcha.
So then, I think Q&A, just really quick, I would definitely want you to subscribe to my YouTube channel. That way, you keep seeing me on a daily basis on my video. But, I think that's really it. I don't know if you have any immediate questions.
No,
If you
I
wanna,
was gonna say,
you could probably pull one of us to the side and let us know, but.
I wanna get one step started at a time, and I know where I'm going
What,
from there.
what we're gonna do is, I don't know if maybe, we could take copies of whatever income
Yeah.
documents you have with you
Yeah.
now, and then we're gonna have Louis, the loan officer,
Okay.
probably run your credit maybe tomorrow.
Okay,
We
sorry,
can get
perfect.
the ball rolling.
Then let me know what's going on, what I gotta
Yeah,
do,
and
that's what I
then-
wanna know.
We'll basically start step by step. We'll tell you what loan you got, what payment you're qualified for, what interest rate, down payment, and then you're gonna be seeing us for the showings as well. You have the presentation printed out. You have some insurance document.
Yeah.
So I mean, this is literally the team that we would refer you
Okay.
to from start to finish to get you to the closing table.
Okay.
And again, to his point about only working in Berwyn, we basically work an hour of the whole Chicagoland area.
Okay.
If you're looking in the suburbs, if you want a condo, if you want a multi-unit, that's